Ladies and gentlemen, as Bitcoin grapples with a 21% correction and threatens to go even lower below 38K, a lot of YouTubers are throwing out random numbers. They think it's going to go here, they think it's going to go there, some people think it's going to go to 20K, 35K, 32K, but there's a specific chart that is drawing on 10-year long cyclical trends that is showing us precisely where Bitcoin will go, a specific number. Now, this chart, not many people have looked at. I've only seen one person look at it. I'll tell you who that is in a second. But that means that no one in the space really knows about it. I've not looked at it before on this channel. This is the truth about the Bitcoin correction and the truth about where Bitcoin is very likely to bottom out. Ladies and gentlemen, let's get into it.
So I've got a few compelling things to show you today. Something specifically compelling on this monthly chart right here. I'm going to draw it out for you and show you exactly what I mean as per the title. The truth about this Bitcoin crash. Most people don't know it, right? Most people don't know exactly why this structure is so compelling, why this structure is so significant, and why we can actually come to a pretty concrete prediction about where we will go. Now, I've given targets in the past, but I'm going to be refining those targets a little bit today in terms of likelihood of reaching one of them in particular. All right, so before we get into the charts themselves, check out the VIP group on Telegram. You can find the links to the VIP information and results group, which I have on the screen right now, in the description below. You can see the title right there, information and results. This group will show you the pricing details, the membership details, and also a PDF with all of our trading results, completely transparent. Every single win, every single loss is listed on that document, with a win record, a win-loss ratio of 78.52% over the course of around 15 to 16 months. Absolutely exceptional. Check out the VIP group if you're interested down below. Let's get into the charts. So just to kind of recap what's happened very, very quickly, Bitcoin entered a vicious upwards trend upon the escalation of ETF rumors and ETF news. That narrative drove Bitcoin to the upside very rapidly. In fact, Bitcoin basically surged to the upside almost 2x. It went to the upside almost 97%, very close to 50K there, didn't quite touch it. We released a video at 48K saying we'd see a rejection at 48 to 52K. We saw that rejection at 49K, perfectly predicted, literally 12 hours before the rejection started. And when that rejection started, of course, we're now downwards over 21%, right? 21% to the max, and then currently down 18%. So we're very much in a correction now. We've only very recently broken the upwards trend, because an upwards trend is formed by higher lows, okay, and higher highs. We had a higher low here at 40K. We only very recently broke below that higher low, and we're kind of forming a downwards trend right now. You can see Bitcoin pulling up some resistance to dropping below the support zone. 38.5K, this green box is a major support zone for Bitcoin. It didn't drop down. It's not dropping down without a fight. It's obviously having a little bit of fight here, but I think it's worth mentioning, this yellow ascending support line has been tested for resistance. So we've seen kind of a resistance support flip now from that level. And that's not good. That's bearish. And also we need to consider as well that 40K, this red line right here, was actually the higher low in the upwards trend that we recently broke downwards, and now we're testing out for resistance. We're very much struggling to get back above it. So not very good signs here for Bitcoin short and medium term. That's not really why I'm making this video though, but I do want to point that out. Short and medium term is not looking very good. We've broken an upwards trend that lasted 4.5 months since September 11th, and we're heading downwards here. Yeah, we're bouncing, brief preliminary bounces on support, but ultimately I think it stands that Bitcoin's not looking good on the medium and even going into shorter and medium term timeframes here. So I think, and this is something I predicted for, many weeks leading into the ultra bullish euphoria phase with that ETF narrative right here. This whole region here was just completely euphoric, right? Realistically, if the ETF narrative wasn't there, the price would have gone downwards there. But of course, it held out for a while. People were not willing to sell just before a decision. The decision came out, and literally within a day, we were dropping downwards. So look, again, medium term, not looking good for Bitcoin. Resistance support flip, rejecting from 40K. Multiple things to look at there, but we'll discuss all of that when more progress has occurred. I think we went into that to a pretty significant detail yesterday. Ultimately, if we're thinking about the medium term trends, what we need to look at really is the weekly chart, because it's the weekly candles that are quite important right now. If we're looking at the weekly candles, we can see that we have this kind of resistance zone on the weekly candle closes at 43.8K and the support zone here at around 41.3K. And you can see, we've rejected from those resistance zones on 2 occasions. We've bounced off support on a couple of occasions here. Realistically, if Bitcoin closes this weekly candle below 41.3K, that's very bad news. We've got 2 days and 21 hours into the weekly candle close. And in order to invalidate this drop, in order to continue to the upside again, Bitcoin will be needing to break a weekly candle above 43.8K. because that would place the highest weekly candle close we've seen in this rally. So unless we get a weekly candle close above 43.8k, Bitcoin is looking bad. And so now, we've established that we're looking bad. Of course, we've recapped some information. When is Bitcoin going to bottom out here, right? When's Bitcoin going to bottom out? And this is where we get into some charts, right? I have targets on Bitcoin. I'm going to list out the targets right now on the screen. In fact, I'll zoom up and show you them precisely where they are. And these targets, by the way, I've had since 48k, right? They're not brand new. I'm not making them up. I've had all these targets since 48k. My first target was 38.5k. That's already been reached. So target one's been reached, okay? Target two was 35k, roughly, okay? We have not reached that yet, of course. It's where this monthly candle closed back here in June 2021. 34.6, 35k in that region. That's the second target. Third target is 32k. And the fourth target, believe it or not, is actually as low as 28k. Now, when I say these are targets, I don't mean all of them will be reached. I certainly actually don't think all of them will be reached, okay? But I think 28k particularly is a little bit pessimistic, but I'm saying those are targets that are possible to be reached, and if we reached all of them, it wouldn't be bad for the Bitcoin long-term structure. As soon as we go below 28k, that's when damage starts being done. Now, you might be thinking, well, what is your justification for 28k? All right, I'm going to show you the new chart I'm looking at in a second. But before we do that, we need to cover this information because it's quite important. I will keep covering it until we reach those targets or until we reverse back to the upside. There is a scenario in which we reach 28k, okay? And I don't think it's a likely scenario, but it's certainly a possibility, okay? Not many people are talking about it. The scenario is based on Fibonacci. If we're taking Fibonacci retracements from the peak of the 2018-2017 cycle to the bottom of the 2018 bear market, we can see Bitcoin reached this particular color line, 0.68, in the pre-halving correction, and by the bottom of that pre-halving correction, we had reached 23.6, 0.236. Okay, if we do the exact same thing in this cycle, which wouldn't be obscene at all, seeing it's the same part of a cycle we were in 2019, just before the halving, that is, we reach this line here, we go down to the red line, we reach 28k. Furthermore, we also have a trend with the Gaussian channel in regards to these Fibonacci levels. It wasn't only the red line on Fibonacci that was reached, it was also the Gaussian channel on the weekly chart, the center line of the Gaussian channel, which lined up with that red line, as you can see, and that does happen to line up with this red line again in this cycle. So, look, there is a possibility we go that low, but mainly what I'm looking at is this chart here, and this is what I'm talking about when I say the truth about this Bitcoin correction. What a lot of people are missing this. I don't think a lot of people kind of understand this very well. One person who does understand it very well is Megawell Crypto. Megawell Crypto pointed this out. So props to him. I'll go ahead and check out his channel. We work very closely together. We made the Crypto Academy course together. But what I'm looking at is this particularly. There is a cyclical pattern that's emerging on Bitcoin that has happened again, and it's formed the third time in the pattern. So it's actually formed a full trend now. You need 3 data points to make a trend. We've seen a trend form now. What is that trend? The trend is this. Okay. Every single cycle, we see Bitcoin do 2 things. We see Bitcoin find kind of this low level that supports the bull market. Okay, so in 2018's case, that was about 5,700 or 6,000 roughly. In 2014's case, that was down here at around this level. It's debated, but around 400-ish, 430-ish, maybe a little bit higher, 440, 450, something like that was the main level. That kind of supported the bull market. You can see that because when we went upwards, we were testing that level a lot before we dropped down into the bear market. The same situation in 2017, testing that level a lot before we saw the final leg of the bear market. And of course, in 2021, that level was around 32k. All right, so let's go ahead and draw in 32k. Something like that, 31, 32k, somewhere in that price region. And the reason why I'm pointing to these levels, again, it's because it's the level that we saw, in bull market, we tested those levels, and then only once we broke down below those levels, the bear market really started. This is a trend that's emerged in all 3 cycles. Now, it's obviously vaguely debated where those levels are. It could actually be as low as 29k on Bitcoin, could be as high as 35k. It's very hard to say exactly, but I like to just be, saying around 32k, because that's where we saw the downside resistance on the way upwards here in 2022, 2023. So it makes sense to me be around 32k. It doesn't really matter precisely where it is. It matters what the trend is. Now, there's a second level in every cycle as well. And I'm going to make these lines, let's make them dotted lines. We'll make them dotted red lines, just so you can actually make them yellow, okay? So the second line is this. On the way down, we see a dead cat bounce. Now, where is the peak to that dead cat bounce on the way down? Now, what do I mean by this? I mean, if we're looking at Bitcoin, from a kind of cyclical nature, we have this kind of bull market low that we hold until we break down for resistance. We then have this kind of dead cat bounce high. Okay, now in this region in 2014, it was around 600 to maybe 700. Look, it could be up here. Again, slightly debated. It could be up here. In fact, let's put it up there, right? Because that was the first proper bounce, 800 USD. And then in 2018, again, we had this kind of dead cat bounce level, roughly over here, right? Let's just say 11,800. That's kind of where we saw the first dead cat bounce. In fact, if we went to the weekly chart or the 2-week chart, let's go to a 2-week chart. We could probably get a slightly better look at this. So, yep, again, 2-week chart, around 12,000. And then in 2014, the first dead cat bounce was changed a little bit here. It was around 719. In 2021, the dead cat bounce, of course, was in March 2022. That took us to around the level we're at now. We rejected from around 48K, 49K. Okay, so now we have this kind of trend in which every cycle we do certain things. We have these certain similar structures. We have the bull market low structure, okay, and then we have kind of the dead cat bounce structure that we form in the bear market. Bull market low being in red, and then the dead cat bounce of the bear market being in yellow. Now, what you'll notice is that in the rise upwards, in the accumulation period that follows the cycle, okay, we see this kind of pump upwards. We see the bottom when we see a pump. And during that pump, we reject vaguely from the yellow line. Okay, we reject vaguely from where we saw the peak of the prior dead cat bounce. In 2016, that was around 700, okay? And upon the rejection, we go around 3/4 of the way down to the red line, okay? So we saw the rejection from the yellow line, we go around 3/4 of the way to the red line. In that case, it took us to around 480 USD. In 2018, we saw the exact same thing. 2019, we saw the bounce upwards after the low, reject from the yellow line, took us downwards fully to the red line on that occurrence, but that was because of COVID. If we didn't have COVID, it only would have taken us down here to 6,500. So again, around 3/4 of the way down to the red line. Now, in this cycle, if we copy that trend, if we reject from the yellow line, we go around 3/4 of the way down to the red line, that would be taking us to something like 35K. Something like 35K, okay? So that kind of validates, I know it's a vague trend, but it is a trend. It certainly is a trend. It certainly is something we need to watch because it's happened 2 times now. It's happening a 3rd time with a rejection from the yellow line. The dead cat bounce high in the prior cycle bear market, okay, always marks roughly the top of the first major impulse, the first major leg just before the halving. We've seen the first major leg now just before the halving. It's topped out at that previous bear market dead cat bounce high. And now, if we're going to follow the trend like we did in the previous 2 cycles, if we're excluding COVID from the equation, we should go around 3/4 of the way down to this red line. Now, the question is, where is the red line? Okay, that's the question, because the red line, some people will say it's actually down here at, as I said, 28K, 29K. Some people will say it's up here, at 31K, right? So this is where you get into the question. But let's just say, for example, it's at 31.6K, because that's what we saw the bear market highs reach. We should be going downwards on Bitcoin to a minimum of something like 35K. And even potentially, if we're saying 2020 counted, for example, we could even go down to 32. It does rule out 28K for the most part, but it does bring some more light, bring some more evidence to that mid 30K region, potentially a wick downwards to 32. So it's an interesting trend. Okay, it is a forming trend. It's not exactly a precise trend. It's not particularly, as I said, precise, but it certainly gives us a rough indication of where Bitcoin would go if it was to follow the cyclical nature of the previous cycles. All right, that mid 35K region may be a wick down to 32K. We then also have the supporting evidence for 28. I think it's slightly pessimistic, but it's there. We need to consider it. But this is quite interesting, and I have not really seen many people at all look at this besides Mega Whale Crypto. In fact, I've seen no one look at it besides Mega Whale Crypto. So this might be the first time you've seen it. I hope you find it useful, and we'll have to track how it goes. Around 3/4 of the way down the red line is 35K. Interesting for sure. Again, not particularly precise, but something we need to utilize. Let's take a brief 1-minute break. We'll get back into the video in a second, looking into the halving date, looking into when Bitcoin will break all-time highs, and looking into my overall macro predictions.
Ladies and gentlemen, here's a little news flash for you. You trust exchanges with your money. They get hacked all the time. They lose funds all the time. So the exchange you're using, you're actually trusting with your money. You're also paying them fees for trades. You're paying up to thousands, tens of thousands of dollars per year in fees. So you want to have a bloody good exchange, right? And that's why I have 2 exchanges for you guys, 2 options depending on your location, depending on what you want from exchange. The first one is Bitget. That is a KYC exchange. You can sign up from anywhere in the world, excluding the United States, excluding Canada, and excluding Singapore. very low fees, protection fund, the whole 9 yards. We've also got Bingx, that's our second exchange, and that is an exchange you can sign up non-KYC from anywhere in the world, including every country, right, with a VPN from anywhere in the world. Again, very low fees, protection fund, everything you need in an exchange. Both of these exchanges are top 10 exchanges in trading volume. Sign up using my referral link below to get a 15% trading fee discount on both of the exchanges. Again, they'll both be in the description. Referral link is there. Get on a good exchange and become a proper trader. Don't use these trashy exchanges that you're risking your money and paying over in fees. Guys, let's get back into the video.
So welcome back. With all this talk about bearishness and with all this talk about when are we going to reach the lows, when are we going to go down a certain amount, I need to remind you of the longer term bullishness of Bitcoin, okay? This is perfectly normal. This correction is perfectly normal. The long-term bullishness is still there. Again, even pointing to the last thing we looked at, look, there's a pretty high likelihood to go down more. We're already down 21%. Say we go down 30%. That's not the end of the world. We did it in the previous cycles. We had the same structure in the previous cycles. It's really not the end of the world. In fact, it's perfectly healthy. I'd be kind of concerned if we didn't do it, to be honest. So, moving further into this kind of rhetoric here, we have a trend on Bitcoin in which we have the previous high. We measure 1,100 days between the high and the next period of time, and that's the break of the high. So there's around 1,100 days between the all-time high and the break of that all-time high. It's happened on 2 occasions. We've got every inclination to believe it will happen again. That will bring us to a break of all-time high on Bitcoin at around December this year. Again, give or take, say, anywhere between October and January, realistically. October 2024, January 2025, we should be breaking all-time highs. We should be breaking 70K. We're on track for Bitcoin. A small correction that lasts, say, a month or two, won't really pull us off track too much. We'd go downwards like that, and then by the time we've reached April, we'll start going upwards again, right? In fact, it would be perfectly healthy. We can't really keep going upwards at this time in the cycle. It's just not what we usually do. We usually see a correction here. So still on track to break all-time highs by the end of the year. That's all good. Everything's good there. Still on track for a bull market. Everything's fine. Halving's in 83 days. As you can see by this countdown clock here, just under 84 days. And so, if we're looking at my long-term cyclical predictions on Bitcoin using my 4-year cycle chart, which you've probably seen before at this point. If you haven't, if you're new to the channel, this is my 4-year cycle chart. You can see the color-coded text matches the date range measurements in color-coded. So you can check out the text and look for the appropriate color and look for the measurement. I've got 5 separate date range trends, all of which come to the conclusion that Bitcoin will be topping out in its bull market in October, roughly, 2025. This was the same chart I used to predict the high in November 2021 and the low in November 2022, both within 10%. Okay, so this chart's extremely useful. It's extremely valid. It's not a theory. It's a trend. It's objectively true. And using this chart, obviously it's a date range trend chart, so I'm uncomfortable making price predictions, but I have made vague price predictions. I've come to an all-time high bull market estimate of 103 to 196K. That's very vague, obviously. That's almost a 90K range, 93K range. So 103 to 196K in October 2025. Very vague. The date range is precise because it can be. The price cannot be. We don't have enough data for it. But when we see the halving, in 83 days, I will take the price we have at the halving, apply it into this trend, and using that, I will be able to narrow down the price target to around a 30K range, I estimate. 30 to 40K range, which is quite precise, to be honest. So we'll have to wait and see what happens at the halving. But again, the cyclical nature of Bitcoin, it's very much on track. Everything's looking good from a long-term perspective. We will be able to narrow down those price targets by the halving, which is only less than 3 months away. So I wouldn't worry too much at this point about the long-term structural nature, whatever it may be, the long-term structure, the long-term health of Bitcoin. This correction is very unlikely to throw us off that track. As I said, unless we go below 28K, which is our lowest target, there's really no threats to be worried about. And right now we're very far away from that. So we'll have to keep an eye on it, of course, like any move, but it's not really a major macro threat at this point. It's perfectly healthy. So guys, with that said, thank you for watching. I hope you enjoyed. We're going to check out the Crypto Academy quickly before we end the video. You can see the Become a Trader 10-unit course. We've developed this course with myself and Megawell Crypto. We're the sole founders, owners, and operators of this course. We made this course in May 2022, close to 2 years ago now. We made the course to kind of teach people how to trade. And now as we're coming into a bull market, as we just mentioned, this is the optimal time to get into it. It's a 10-unit course, university style. All the content's there on the website. The blurb's there on the website. You can read about it. And then our email address is also there on the website as well. Guys, thank you for watching. I hope you enjoyed, and I'll catch you in the next video. Cheers.